Essentially, Craig, for me, blockchain has the potential to change the economics of how we manufacture different securities as we know them, whether it's a deposit or it is some other structured product. And DeFi is one experimentation. Whether it works or not, we will see. But that is what it is allowing us to do. And I see a lot of potential there.
When Effie Pylarinou got her doctorate in finance, her thesis was titled A Chaotic Approach to Stock Market Returns. Well, the markets certainly experienced more than their fair share of chaos last year, and not only traditional markets like equities and commodities, but especially in cryptocurrencies. I spoke with Effie about whether Bitcoin has reached a tipping point with institutional investors, if this tipping point could become the catalyst for widespread adoption of digital assets, why advisors should treat cryptocurrency like emerging markets in their portfolios, and a whole lot more on this episode of the Wealth Tech Today podcast. It's another fantastic day in the wonderful world of wealth tech. Welcome to episode 83 of the Wealth Tech Today podcast. I'm your host, Craig Iskowitz, and I run a consulting firm called Ezra Group. We're experts in wealth management technology, operations, and strategy. We deliver growth-oriented solutions to broker-dealers, banks, asset managers, RIA aggregators, and especially to their fintech providers through our premium advice and targeted market analysis. On this podcast, I speak with some of the smartest people in the wealth management industry who are on the leading edge of technology and innovation. When you have a moment, please head over to our website, EzraGroupLLC.com, and sign up for our newsletter. You will be rewarded with regular updates and excellent thought leadership content.
I'm happy to introduce my guest for this episode is Effie Pylarinou. Effie is a global fintech influencer, a PhD in finance, an old-timer, a prolific writer, a traveler, and a true Sagittarius. Effie, welcome to the program.
Thank you very much, Craig. And I really do look forward to meeting you in person, hopefully in 2021. But thank you for bringing me closer to a country that I have lived in, worked in, and I have still a lot of friends and great memories.
I'm happy to be able to do that. Yeah, yes, I'm definitely looking forward to meeting you in person sometime, either here, either in the U.S. or over in Europe, and when we're traveling again and we're doing all those other normal things again. Yeah, we did some virtual hugs before we started, but that's the closest we're going to get with me here in New Jersey and you calling from Switzerland, yes?
Yes, exactly. Exactly. But at least we can share virtual backgrounds.
Yeah. No, mine is a real background. Yours is virtual. Mine is a real background. I can't afford a virtual background. So let's jump right in. Can you give us a 30-second elevator pitch about yourself?
Oh, wow. That's a tough one. I wasn't prepared for that one. But let me tell you, I'm a Wall Street old-timer, and I've become a new age fintecher. Maybe I'm a millennial, if you like. I've been focused in fintech for the last 6-7 years. I very much enjoy being in the midst of this transformation. And I'm based, as you already mentioned, in Switzerland, which maybe is not a top fintech hub. It is definitely the top wealth management place in the world, and it's definitely a top crypto blockchain hub.
Yeah, there's quite a lot going on there, in fact. And I mean, it doesn't really matter where you are anymore, especially now when everything's been forced to be digital and forced to be virtual. So you can be anywhere. Why not be in Switzerland? What's the difference? Or whether you're in London or Switzerland or Nairobi, or in lovely New Jersey, where I am. It shouldn't really matter. We're all connected.
100%. You're so right. But I'm talking from the previous sort of life, right?
Of course. Yeah, the previous life, which hopefully we'll get back to. But one of the things I wanted to talk to you about, and there's so many things to talk about. Before we had this conversation, we were going through topics that you are interested in. There's so many. You're so multifaceted, multi-talented that I could talk to you about a dozen different topics. But the one we settled on was blockchain's impact on wealth and asset management, blockchain and cryptocurrency. So let's just talk about that. You guys put out a report. In combination with the with another company
The
with
wealth mosaic.
Wealth Mosaic. Thank you. I keep getting their name mixed up. Let me get it right. The Wealth Mosaic. You have a report called Wealth Tech Views Report. Can you talk a little bit about that report and what people can expect when they if they downloaded it?
Well, the aim of the report was to start showcasing what is going on in the market that is going to reshape the asset and wealth management space from the blockchain industry, if you want, which includes, of course, cryptocurrencies. And my aim there was to start, to get people off the brokerage screens, watching cryptocurrencies prices, doing whatever they are doing, and understanding really what is going on, why this technology is both an infrastructure that will change capital markets, asset management, and also has already created an asset class. And for those that haven't noticed, we are up to $1 trillion, roughly, give or take. So, for asset managers and financial advisors that want to ignore this asset class, I don't think that it is a good decision to ignore it. I'd like to highlight the projections that are claiming that this asset class may grow 3 to 4 times. And where I get these projections, Craig, is from, I think that there's 2 sources I'd like to refer to. There's some great research pieces out of, for example, ARK Invest. But also, I'd like to highlight that when I look at the investor pitch decks of, for example, Bakkt, Bakkt,
Is it a wallet?
the digital wallet that's backed by ICE and has just announced that they will go public through a SPAC. And of course, because of the SPAC structure, they can put out all the marketing material and so on, and it's already out there, and these are the projections. And it will be also interesting to see how the Coinbase IPO prices, on what kind of projections they will price in the market, so we understand what is the market telling us.
Yeah, those all very interesting, and Coinbase I think is the biggest one considering their dominance in the crypto space, and that should be. I imagine the excitement will be off the charts when their IPO comes, and because people are just seem to be so interested, especially with the increase in value, as you mentioned. The total crypto space is now over $1 trillion. Most of it is dominated by Bitcoin, but you mentioned that advisors shouldn't ignore crypto anymore because of the market share, and some reasons I've heard of that. One is that institutional firms are waiting for this because they were worried that the market was so thin they couldn't put big orders in. Now, once you hit $1 trillion in order flow or market share, that they have more confidence in putting in big orders. Is that the main reason why you think, or are there other reasons that hitting $1 trillion is important?
First of all, I think that the market has matured and it's not anymore just the Bitcoin dominance. By the way, Bitcoin dominance is around 68% right now. It's fluctuated. I mean, it used to be, close to 100% 4 years ago, but now it's been fluctuating, and we consider a 68% dominance level pretty healthy and normal. But what's happened, Greg, is as the market gets more educated, we are understanding that different cryptocurrencies are really different in their nature. So Bitcoin, for example, right now is being viewed as a scarcity play. We've all heard it as the digital gold, but of course, we know that it's not the only potential narrative that it could impersonate. It could take on part of the global settlements network and, take a percentage of the remittance market. It could become an asset that has value because of its self-sovereignty and trust, because it protects against seizure and let government. Let's not forget how many countries in our world today are living under dictatorships, and there's value, or hyperinflationary regimes. So a network like Bitcoin that is already over 10 years old, very much trusted, has these potential, values and narratives. It just happens right now that the dominant one is the digital gold. And of course, it's related to the monetary situation right now and to the fact that a few noteworthy companies have decided to allocate in their treasury Bitcoin. So that's another narrative that is playing right now in the market and may grow, and we expect it to grow in 2021. So right now we have the latest that I was looking at were 29 companies, public companies, that have allocations to Bitcoin in their treasury. Most of them are in the Bitcoin business, like, mining, publicly traded companies, or Galaxy, asset management companies, but others like Square or MicroStrategy or another one in London in the UK, Mode, are not related. And I expect to see more of this. But what I want to add to this is that there are other cryptocurrencies like Ethereum or other non-fungible tokens that are completely different. It's not a scarcity play. So, this is becoming a rich asset class, a bit like emerging markets, I would say. I like to think of it if you are, as an asset manager, as a financial advisor, you want to allocate to innovation, because that is the diversifier. That is what will provide resilience to your portfolio. So within the theme of innovation, you definitely have to have an allocation to this industry. And within that allocation, you can go into cryptocurrencies. There's a rich variety there. Now we have also decentralized finance. So already we have more than 1, 2, 3, 4 different thematics there. And then we have the rest of the infrastructure plays that I'd really like to talk about and that we address in our report.
So Effie, you said a lot there. Let me break down some of the things. I'm trying to take notes. So yeah, the 68% of the total market cap of being Bitcoin, yes, it's down from 100 or close to 100. So that's a sign, as you said, of a healthy market, that it's diversifying a bit. Although I think Ethereum is probably a large percentage of that 32%, but still better than it all being concentrated in one. Yes, there's more uses for Bitcoin than just digital gold. It remains to be seen if cross-border payments can pick up, if the Lightning Network can reduce costs enough that cross-border payments and settlements would be useful, or whether if Bitcoin itself would be useful for those, or if just a new blockchain would be better. But one thing you mentioned, the public companies, so that goes to what we were talking about earlier about institutional adoption. And one of the topics I wanted to ask you about was 2020 being the year of institutional adoption of Bitcoin and crypto, and what were the signals? And you mentioned one, which was public companies allocating Bitcoin, or are using part of their treasury, their corporate treasury, and allocating it to Bitcoin. As you said, PayPal and Square, but I think one of the biggest ones, at least that I've heard, was MicroStrategy and Michael Saylor, their CEO, putting in $450 million of their cash into Bitcoin, which turns out to be quite opportune, since I think they've tripled in value since they bought. Didn't they buy around 1150, and now it's at 35? So that's quite it's quite a return on what was supposed to be a very safe and stable investment. So he looks like a genius, and now he's raising more. So can you talk a bit more about that signal and what it means for the future of Bitcoin and crypto?
Well, there's a couple of things. First of all, you mentioned PayPal. PayPal was the other signal, but they took another route. They are getting into offering services. I think in the US only for now, you can buy and sell a couple, 3 or 4 cryptocurrencies. They didn't go into the treasury bucket of acceptance yet, or at least publicly, because these are what we know publicly. Maybe there are other companies out there that have put in small allocations, but for other reasons they don't choose to communicate it publicly. So what I see, Craig, is companies like Square, Bakkt, and PayPal, even if they didn't put money in their treasuries in Bitcoin specifically, what they're doing really is they are making sure that there is a large-scale adoption of wallets in the world. And this is important because these wallets, the actual digital wallets that can hold assets, that is something that is very different than the Google Wallet or other type of payment wallets that we are used to. So we are preparing the world to transition into a world where we have wallets that can hold assets. And that, to me, means that we're going towards a world where everything will be tokenized and we'll be able to hold it in our wallets. Whether we store our wallets in our handbags, we ladies, or choose to have them in, safes guarded by the new custodians, that's another issue. But we are going into wallets, and that means exchanging value in a much more secure, transparent, cheaper, and more efficient way, and having, disintermediation at a very different level. So that is what I see as really happening through these large-scale adoptions.
Hey, I want to take a break from this episode to talk about one of my favorite charities, the Invest in Others Charitable Foundation. Invest in Others is a nonprofit that supports and empowers financial advisors who give back to their communities with overwhelming generosity. Now in its 15th year, Invest in Others has raised and distributed millions of dollars to worthy charities that are run by or assisted by financial advisors both in the U.S. and abroad. The Invest in Others Foundation is kicking off 2021 with a Restock the Shelves campaign. This past year, demand for food from nonprofits was at an all-time high. Last year, more than 50 million people experienced food insecurity. Now that the holiday season has ended, supplies at many food banks and shelters have dropped, but demand has not.
To help restock the shelves, Invest in Others will award grants of up to $20,000 to nonprofits who are fighting hunger in their communities. If you work in the financial services industry and also volunteer for a 501c3 nonprofit that's in need of food items, apply for a grant from the Invest in Others Foundation on its behalf. They want to help you restock the shelves in your community this January. Applications will be accepted now through Friday, February 5th at investinothers.org/grants. So if you want to put your 501c3 nonprofit's name in for a grant of up to $20,000, please go to investinothers.org/grants. That's a great insight. Yeah, that should really prepare people for a more widespread adoption of tokenized assets and digitization, even more so than we've had before. But let me go back to something you said, and thank you for pointing that out, that yes, PayPal didn't buy crypto in their treasury, but they're offering services to buy and sell crypto, which is very lucrative. As we've seen, Square and PayPal are making tremendous amounts off selling crypto to their customers, mostly through the spread. So what do you think of that?
Yeah.
Do you see that as something that a lot of other firms will start to do? And what will be the impact of more retail investors being able to buy crypto easier through different apps, whether it's Square or PayPal or any other app that they happen to work with?
Well, Craig, I mean, let's not forget that a lot of the robo advisors or the wealth techs, the social trading platforms like eToro, Robinhood, all those had already used, even Revolut, they added to their services crypto. It was a very efficient way to lower the customer acquisition cost. And if you look at when they launched these services, their users really shot up because of that retail interest. So there's been others before that have done that, and we will continue to see that. And I think this is a market where it's not like one winner takes all.
Mm-hmm.
It will become basically mainstream, and we will see it everywhere. Of course, for now, we have to distinguish whether, when I'm buying crypto on, Revolut or eToro and so on, am I really holding those assets? Who owns them? And those kinds of questions that are traditional questions, in the brokerage and asset management business, but they're more important in this asset class.
Indeed. Yeah, that's an excellent point. And in the wealth and asset management world, we long ago moved from the point where I'm old enough to remember when we bought a stock, we would get the stock certificate mailed to us if we wanted to hold it ourselves. Now that would be absurd to do nowadays. No one holds their own stock certificates. Even if you give it as a gift, I used to buy stock, one share, and frame it and give it as gifts to people. No one does that anymore. No one has a physical stock certificate anymore. So, and again, as an early crypto enthusiast, I'm a very strong proponent of holding your own keys. But isn't that like holding your own stock certificates? And people are already used to not holding their own private keys and allowing PayPal or eToro or any of these apps to hold the keys for them?
You're right. We're going back to bearer instruments, right? Which, as you said, but this is in digital life, and then we will have the choice whether we want to be the ones holding the private keys or not. There's also technologies and wallets and custody providers that are evolving this technology. So we are even, going away from private keys and still being able to hold our assets. But the main point is that transacting won't need so many intermediaries. And also it will be across assets, it will be across borders, it will just be completely different. And I want to go back because we spoke about Bitcoin and 2020 being a year of institutional adoption because of Treasury, because of PayPal and others moving into offering these services. But I also want to add and not forget the regulatory buy-in that happened in 2020. We have at least 4 licensed crypto banks that were given their licenses. We have 2 in Switzerland, Seba Bank and Signum, that are regulated by FINMA. And then we have 2 in America. We have Avanti in Wisconsin, Avanti Bank. And then we have Kraken, who got their license also to set up a bank. So this is a very important buy-in from the regulatory perspective, plus the latest announcement by the Office of the Controller of Currency about banks being able to run nodes, and this is more related to stable coins and the potential of that market.
Exactly, and those are big issues. So how do you see that shaking out in terms of the wealth management space? So now that the OCC is allowing banks to run stablecoin nodes, and now that there's a couple of crypto banks, that should enable a wealth, even more tighter integration of wealth and banking and lending and putting crypto in there, that you can get everything at the same place much easier, since it'll be much more fluid with these technologies. Do you see that, or do you see other things shaking out from this?
I see that, but we all know from the experience even of the digital transformation at the B2B level of the existing banking system. We've seen how difficult it is to replace existing infrastructures and architectures. So, to think of what kind of infrastructure is needed to participate in this in these new networks that are public chains, open source, and so on. It's going to take time, but we're definitely going in the right directions. We are going to be seeing pilots, and the market forces will push banks to start participating in these networks. What I do see, and this is also well documented in the report that we produced, is we are seeing the use of blockchain infrastructure, rather, I should be more precise, the digital distributed ledger technology being used, for example, in fund administration, which is a very complex and cumbersome procedure in the life cycle of securities, especially in mutual funds. But this is what is happening, and it is happening in Europe. One company is Funds DLT out of Luxembourg, and they are deploying distributed ledger technology for this purpose. So that is one way of thinking of it. Another initiative and company that I'd like to bring up as an example, also featured in our report, is a company that is not using cryptocurrencies, but blockchain infrastructure to offer savings accounts with high interest rates. So 3% on US dollars, 1.5% on euros. And this is done because of the transparency and the efficiencies and the validations that are possible at a much lower cost on the blockchain.
Well, is that really the
So
full reason for why that? I mean, these high interest savings accounts we're seeing, and this reminds me of how some of the robo advisors like Wealthfront and Betterment were off all the rage, offering high interest accounts until that all got shut down to try to attract clients. And isn't this really the same thing that they're looking to attract clients? But it's not the efficiency that's allowing them to pay 3%. It's that they're lending out those stable coins or that Bitcoin to other investors who are paying margin to then invest it or leverage. Isn't that really where that interest rate's coming from?
Well, you're talking about the crypto lending, like, companies like BlockFi
Mm-hmm.
in the US and others, that yes, that is where it's coming from, but that is lending cryptocurrencies. What I'm talking about, and this is an example of a company here in Switzerland called Crescofin, it's got nothing to do with cryptos. It's all about taking the blockchain infrastructure and recording on the ledger invoices, ensuring the invoices, and being able to pay a very high interest rate backed from, it's like an asset-backed security, and the efficiencies allow for that interest rate. So it's got nothing to do with cryptocurrencies. Essentially, Greg, for me, blockchain has the potential to change the economics of how we manufacture different securities as we know them, whether it's a deposit or it is some other structured product, and DeFi is one experimentation. Whether it works or not, we will see. But that is what it is allowing us to do. And I see a lot of potential there.
That is quite insightful. So let me just repeat what you just said. Blockchain has the potential to change the economics of how we manufacture securities.
100%.
So once that, so obviously we've seen some of that in limited forms. What's the tipping point when that happens, and how will that change how financial advisors build portfolios? How will that change how investors see retirement when blockchain has changed how we manufacture securities?
Well, blockchain, when it's changed how we manufacture securities, I mean, it's a lot of the wrappers that we know today. We have mutual funds, we have ETFs, we construct indices, and all these. I come from the structured products industry. There's an infinite amount of variations. I'll call them wrappers. They're contracts, right? And then, a certain template, if you want, gains traction for good reasons, right? Sometimes it's tax reasons, sometimes it's market efficiency reasons, and so on. And here we're talking about a much more automated and easy and transparent way of manufacturing these contracts, instead of them being so complex, so opaque, and so expensive, and very difficult to have a primary and a secondary market. This is really what this is all about. So tokenization that everybody talks about is really about that. And we can unlock value that could not be unlocked before. So we will have a lot of examples going forward. I mean, real estate is the easiest one to understand, but there's much more out there in the art world, all these non-fungible tokens that are
NFTs.
represent, yes, the NFTs values that the financial markets, it just doesn't make sense. And I'm also seeing some very interesting projects coming out in the impact space around environment as we get more data and better metrics. It is very possible to do these things.
So
So
Effie, we've talked and talked, and I wasn't watching the time, and now we're just about out of time. And I had a whole bunch of questions I wanted to ask you. I apologize, but all very interesting, very important. I'm so happy you were able to share these insights with our audience. And I really want to get you back on the program because we have so much more to talk about. But I know you have a hard stop in like a minute, so I'm going to say goodbye. Thank you so much, Effie Pylarinou, for being on the Wealth Management Wealth Tech Today podcast, and look forward to speaking to you again really soon.
thank you so much, Greg, for having me. It was a great pleasure.
Hey, it's Craig again. Hope you enjoyed this episode. A couple of my takeaways. Love talking about blockchain, crypto markets with industry thought leaders like Effie, and she did not disappoint. Some great opinions, great knowledge sharing here. Like when she was talking about how blockchain as an infrastructure will change capital markets and asset management. We're seeing that already. Interested in some of the firms she has highlighted in the Wealth Mosaic annual report, and you can get that report. There'll be a link in the notes, the show notes for this podcast. How we've hit $1 trillion in market cap for cryptocurrencies, which is going to encourage more institutional investors to get involved, since now the market can handle larger orders. Very insightful comment from Effie about how cryptos are becoming like emerging markets, or at least advisors want to allocate to crypto like they do emerging markets. And finally, one of the benefits of the cryptocurrency explosion and the Bitcoin hype is large-scale adoption of wallets, of digital wallets. The more people that have digital wallets, the more likely they are to be able to hold digital assets and be interested in digital assets, non-fungible tokens, and other securitized products. So that's the end of this episode 83. Hope you enjoyed it. And remember, please head over to our website, EzraGroupLLC.com, and sign up for our newsletter. And I will talk to you all again next time.